AT&T, ticker symbol T, and Verizon, ticker symbol VZ, provide a case study comparing and contrasting patterns and general trend development for two stocks that are in the same sector. It is similar to what was done with Chart Pattern Example Case Study 7, SPY and BAC. But instead of comparing an individual stock chart to a major stock market index, the similarities and differences of two industry peers and competitors will be examined. So far, both charts have displayed similar behavior from long, medium, and short-term perspectives. Of course, there will always be some variation, but overall, their outlines are quite alike. Here, both charts essentially have the same triple bottom range to start a major uptrend. They both have bullish continuations, but the horizontal range lasts longer for T, while VZ has more progress to start 2011. During early 2011, the two charts experience short-term bullish volatility. Towards June, there is a noticeable bearish to flat period to display a cleaner downward slope for VZ and a cleaner downward channel for T. The two stocks follow the same general uptrend in the broader stock market during this time. There are also increases in sharp fluctuations from late 2012 to late 2014. T undergoes a sharp bearish reversal in late 2012 that becomes the site of a wider resistance range from a double top and gap down combination. VZ has some sharp downswings, but they don't align with the later resistance range in early 2013 that is also defined by a double top. For VZ, it is a double top of the declined variety. This theoretically leads to more valid downtrend lines appearing earlier, but a less comprehensive horizontal range of long-term resistance when compared to the additional gap levels on the T chart. Similarity: a bullish reversal range starts the second half of the year up for both charts. The difference is T has a large triple bottom and VZ has a flat bottom. T breaks the long-term trend line later since it was on a shallower angle. T has a compact double top leading to a neutral to bearish phase after a small drop, while VZ has a slightly declined range within a larger bullish continuation. The same sharp peak forms on July 29th and leads to a progressively more aggressive long-term downtrend. When there is a bullish retracement in October, there is high bullish volatility with large green candles and moderate spikes in bullish volume. However, T is more predictable given the cleaner price action in a double bottom range, while VZ has a sharp upswing that initially slows because of a small gap down fill. The broader stock market has lower activity in the first half of 2015 compared to the volatile second half, especially around late August. This is seen to a greater degree with VZ. Then into 2016, both charts begin to converge and display the same general steep peaks and bullish reversals. Late 2016 to 2017 still has similar price action on the two charts, but it is through the differing formations of chart patterns. T has a flatter double bottom, gap down fill at the 4265 area, and a flatter head and shoulders to reverse a minor bullish retracement in June. VZ has a declined double bottom, gap downs halted by a flatter double bottom, but the wider gap down range transitions into a descending triangle to continue the drop. There is a resemblance to a minor flatter head and shoulders in June, but it is not as clear as what was seen with T. Bullish context is stronger towards September as the gap up level presents immediate support compared to the breach of the gap fill range for T. Now the charts are polar opposites as T goes on a stable downtrend and VZ goes on a stable uptrend. As 2018 ends, both present a sharp upswing in the short term. Contrast continues into 2019. T has a late 2018 double top reversal and a series of larger 3 methods falling bearish continuations, transitioning to an uptrend. It is composed of a series of large 3 methods rising bullish continuations in a broad reverse head and shoulders formation. VZ sees a failed triple top form a horizontal resting phase in a bullish continuation to end 2018. A strict double top aligns with a later downswing for a larger, less strict triple top. The downtrend develops further by a smaller triple top to reverse a minor bullish retracement in June. Like years past, the price action is mostly neatly contained within the pattern outlines despite the divergence between T and VZ. T goes on a stable uptrend defined by the pair of stable uptrend lines from the right side of the reverse head and shoulders. While VZ returns to the early 2019 highs, it remains mostly bearish to flat. Towards 2020, both charts become more neutral to bearish. T has a gap up fill range extend the lower boundary of a potentially wider flat top range. VZ has an upper range defined by the end of an upward channel and a small flat head and shoulders within the upper 50s to lower 60s range. T begins 2020 with 2 sharp upswings as relatively normal levels of selling volume begin to drop price, while bullish volume subsides. Most support is from the narrow gap up fill and intersection from old uptrend lines. After the small head and shoulders, VZ started 2020 with a clearer decline from the helpful downtrend lines running from the head and right shoulder. Bearish volume also increases for a normal break of the lower boundary around 58.50. Again, price action is neatly contained within the highlighted outlines for increased validity of the steady formation of a larger bearish reversal developing on both charts. T now begins a sharp downtrend as the stronger support of the gap fill and old uptrend lines is eventually breached. There are minor head and shoulders features since the 2 central flat downswing areas are slightly higher than the downswings before and after them. Overall, it is a horizontal flat top reversal. VZ has a more salient head and shoulders forming the foundation of the bearish acceleration. The left shoulder is approximately the upward channel, the head is the smaller head and shoulders, and the right shoulder is a volatile descending triangle. 58.50 serves as the focal point of the neckline, which is less precise due to increased volatility. However, there is still a bullish retracement into March to temporarily recontact the neckline range and the descending triangle's base. Like the broader stock market, T and VZ stop dropping in mid-March, at which point they begin to diverge significantly. T stays over the firm mid to upper 20s range that becomes a wide support base in a potential descending triangle, though a bearish continuation does become slightly less likely as a short-term descending triangle fails to start 2021 with a bearish acceleration, and the longer-term downtrend line is broken. VZ, on the other hand, has large-scale 3 methods rising price action for a characteristically sharp bullish continuation, though the uptrend does predictably halt into the old head and shoulders range, where sharp corrections are mainly started by a declined and later inclined double top. This case study highlights how even 2 industry peers and competitors within the same sector can have drastically different price action and volume in various timeframes. The periods of similar price action highlight how general sentiment within a particular sector and the broader stock market can generally lead to the same type of price action. This takes the form of similar patterns such as bearish reversals by head and shoulders or double top ranges, or bullish reversals that take place on both charts, with essentially the same triple bottom range.